Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM, and today is Thursday, it's the 23rd of March. My email address, if anybody needs to contact me, rshaw@fxcm.com. I just want to remind everyone, today is going to be the last webinar until the 3rd of April, so I'll be away for just over a week. So just keep that in mind. Hi, Howard. Morning to you, and welcome, and nice to have you on the webinar. Let's just go ahead and bring up our high-risk investment warning. I'm going to keep this on screen for a few moments. And what I have on my agenda for today, I want to take a look at Euro US dollar. I want to do an analysis of the DAX, and I want to do an analysis of the NASDAQ. So we'll start off with the Euro US dollar, just in light of what's happening with central bank activity. Let's bring up our market commentaries disclaimer. Okay, and just finally, our references, market scope and trading view. We'll start off with trading view and then we'll move to market scope. Let's just bring up trading view here, and what I want to show you, the very first candlestick chart at the top is effectively, it's the German 2-year note minus the US 2-year note. Why have I chosen the 2-year notes? It's because they are very good proxies for the monetary policy of the two regions' central banks. So the ECB is represented by the German 2-year note. The Fed is represented by the US 2-year note. And what we can do is we can start putting in some peaks and troughs here. So let's put in a reference trough. I'll just make that T. Let's move it a little bit up. Let's put in the next one, which would be the peak. I'm going to put in a P. And then once you've got the references in, you guys can, I think, see where we're going with this. The next would be the higher trough over here. We'll make that HT. The next would be the higher peak over here. Let's make that HP. And then we've got just two more points in the series. We've got the next higher trough. And then we've got the higher peak. So what am I saying here? I'm saying that the German 2-year note is showing uptrend relative to the US 2-year note. The spreads in favor of the German note. Why is that? Well, it's because the ECB now has turned more hawkish than the Federal Reserve. And we saw that last night. The Fed delivered a 25 basis point hike, but I think we can all agree it was a dovish hike. They said perhaps one more. They suggested they near the apex of the hiking cycle, which is something that we speculated on. And in comparison, the ECB is still talking very hawkishly, and you can see it's reflected in the spread of the 2-year notes. And you can see, well, if the 2-year note has the higher trough followed by a higher peak, well, let's take a look at the Euro US dollar. So let's put in our reference trough over here. Okay. We've got a reference peak over here. It's over a matter of 2 weeks. They made it a reference trough, reference peak, but it makes all the difference because then we can put in the higher trough here. Let's pull it a bit up. We can put in the, let's put in the higher peak here. I'm being a little liberal with the labeling, but it's capturing the trend nonetheless. Here is the next higher trough. Okay, there's a point, there's 2 points I've missed here. It doesn't matter. There's a high peak there, high trough there. And then now we can put in HP question mark over here. But by and large, the idea is the 2-year note is moving in that northeasterly direction, and then the euro US dollar is moving in that northeasterly direction. And then I've got a correlation coefficient between the two. So how sensitive is the euro US dollar to the movements in the 2-year note? Well, very sensitive. It's currently at 84%. And if we have to go back in time, the majority of it is on the positive side. It's just over here where the German interest rates went negative, where we kind of lost some of the sensitivity in terms of a positive sensitivity, but that's sort of few and far between. So the idea is, as long as the euro US, I beg your pardon, as long as the ECB remains relatively more hawkish than the Fed, we can monitor that using 2-year note, and it looks as if the euro US dollar is following. Let's go through to market scope and continue with the analysis. Let's just go to euro US dollar here. All right. What I think is going to be key areas to look at, we're at 109, which is really a terrific movement over the last week. I think the first key would be 110. I think that's a psychological level. 110 would be psychological. And I think as we move into the towards the second half of 2023, I think 115 becomes potentially in play, subject to further information coming to light, subject to correction, right? But these, I think, are the two psychological levels. Let's cancel that. I don't need that. In order for those to really be in play, the RSI needs to stay above 50. Okay. Now, what's interesting is the daily chart. If we go through to the daily chart, what I think is interesting is the stochastic. We've just hit that upper quintile. So as long as we hold this upper quintile, the strength must go to euro US dollar. If we drop the lower quintile, then the strength is waning. So on a daily chart, we just want to monitor the stochastic here. The longer it stays in this upper quintile, the higher the chances of further price appreciation, right? You can see here's another nice swing. Here's it hugging the upper quintile. So we've just hit this upper quintile. Just be a little careful on the hourly chart. We have been moving quite aggressively throughout the week. So just be careful. The R1 level may act as short-term resistance. So sort of your dips probably become quite compelling here. But by and large, the spread between the 2 years shows the relative differences between the two central banks. So that's the euro US dollar. I just want to go on now to the DAX, do a top-down analysis of the DAX, and then do a top-down analysis of the NASDAQ as well. So let's just bring up the DAX. And this is an interesting chart. It's one of my favorite charts to analyze. And the reason it's one of my favorite charts is because this trend is fantastic. We've got a reference trough, a reference peak. Here's the higher trough. Here's the higher peak. Now, this is where the sort of puzzle comes in. Are we getting this higher trough? And I've got higher trough question mark. We'll already know that, I think, by the end of next week. And what is required is for a candlestick to come that takes out this week's high and closes above it. And then I think we can take the question mark out. But it's really a good-looking chart. You can see that the RSI is above 50. As long as we stay above 50, then I think that we will get the higher trough locked in. And again, I'm just going to tag on the subject to correction. So we've got to be very careful with the way that the market develops, but it's looking very interesting indeed. If we go through to the zone analysis here, we've moved from zone 3 into zone 2. So there is relative strength from zone 3 to zone 2. The next would be, well, we want to move from zone 2 to zone 1. Zone 1 is effectively what we call the growth area. Zone 3 is what we call the value area. So we've moved from value to neutral. And are we going to move from neutral through to growth is the next challenge. Keep an eye on stochastic. We want the stochastic to reach that upper quintile and hold. When we get to the upper quintile and hold, that's where the magic happens. Okay, you can see that's where the magic happens. If we go down to the hourly chart here, we've got a very interesting looking hourly chart. Now, we have got a pullback and we're on the central pivot. We're on the central pivot support. We're going to get the market opening in 9 minutes. Look for trigger 1. We've already got a trigger 2 over here, so trigger 2's pulled. We just want to see if we get the EMAs crossing to the upside. Does that guarantee success? No, it doesn't. We really need the stochastic to show the momentum, right? So the momentum has to entrench, and the way it does that, it moves into the upper quintile and holds. Again, just to belabor the point, once we get to the upper quintile and hold, that's where the magic happens. Okay, so you can see that we just need the triggers to pull. If we can get the triggers to pull, then we want the EMAs to show angle and separation to that northeast. We want the stochastic to make its way up towards the upper quintile. So the DAX, let's just reiterate, has an uptrend. It has moved from value into neutral, so relative strength forward. All we need now is the short-term traders to start aligning themselves with the longer term participants. And the way that we will be able to monitor that is if there is the triggers. And once there's the triggers, the next step is for momentum to build. Nothing is a given in this game. I don't think you need me to tell you guys stop losses and risk management is really a non-negotiable. The last chart I want to take a look at is the NASDAQ, which is sensitive to interest rates. The fact that the Fed came through with what we call a dovish hike, I think is very interesting. And you can see that there is a higher trough, higher peak, higher trough, and potentially moving to the higher peak here. Take a look at the RSI. It's a terrific looking RSI. It's above 50. We go through to the daily chart here, and we are sitting in the growth area. And look where the stochastic is. Now, if the stochastic can hold this 80 area, then we can get some real traction going, right? Again, the previous time it held. Okay, here's an example of it slipping. So here it hit and then it slipped. That's no good. So if you get a stochastic that hits and then slips, the chances of getting a protracted swing have evaporated, right? So we want to kind of watch for these. So let me just get out of the way there. So we want to just watch for these if it hits and slips. So if hit, is it going to hold or slip, right? If we go through to the H1 chart, trigger 1, trigger 2. Does this guarantee success? No, doesn't guarantee success. What we need is the momentum, and the momentum is with the stochastic making its way to the upper quintile and holding. The last time it did that, there was a really good swing. Okay, so we do have some nice potential setups. The question now is there going to be follow through? That I can't answer, but because we don't have an answer for that, I want to reiterate: stop losses, money management, simply not negotiable. Must be something that you employ at all times. Just watch the central pivot here. If it acts as resistance, then perhaps one would think, is this sort of a possibility? Of course, it's a possibility. The reason that it is sort of my least preferred possibility is because we're sitting nicely in zone 1. And zone 1, as long as we hug zone 1, then the probabilities, the chances are for higher prices. Take a look at the Bollinger Bands here. The Bollinger Bands are starting to separate. The upper Bollinger is moving up, the lower Bollinger is moving down, showing that there is some sort of expansion in volatility there. Well, if there's an expansion in volatility and we hold zone 1, and if we hold the upper quintile, well, that makes for very compelling chart reading. All right, that's what I have for you this morning. If there's any questions, please go ahead and type those in. I want to just remind everyone that this would be the last webinar until the 3rd. So I'm going away. We'll pick up again on Monday, the 3rd of April. All right, no questions coming in. So let's wrap up here, guys. Thank you very much for joining. I want to wish you guys a good day, a good evening ahead. Thanks very much, guys. Wait a sec. Okay, yeah, I'll put the rest on Telegram. All right, guys. Thanks, Anna. I'm really looking forward to it. Thank you very much. All right, guys. Speak to you when I get back. Cheers.